Hi, welcome to Know It Olly's ELI5s. Today talking about Darkpools. A dark pool is an exchange that's blind. Just like the New York Stock Exchange, they operate in a very similar way. It's just that you can't see the bid and the offer prices. You put your price out there and maybe someone takes it. It's not tied to, well, it should be tied to the lit price that you see on the normal stock exchanges. However, there can be some differences there. You'd use this for large orders. If you want to move 1,000,000 shares from one bank to another, then you're most likely going to do a lot of that transaction through the dark pool. That way, the price that's on the lit exchange is less impacted by that transaction from one individual to another. It's not 1,000,000 shares going to 250,000 different people who all want different prices. It's a single transaction, and so putting it through the dark pool will help to ensure that that is a little more reflected within the market, or at least that's my understanding of how it's supposed to help our markets and not let them get hit by massive waves of selling from big institutional players. The problem now is that almost 1/3 of all trades go through hidden exchanges. That's a lot of traffic that isn't hitting the main exchanges for us to have our price discovery. Because they're hidden from the public, do you know if you're getting the right price or the best price if you can't see it? There is a tape that comes out with those dark pool transactions, but it can be really difficult to read for a lot of retail traders. There's also a lot of these dark pools. Almost any large institutional trader can set up one of these dark pools and use it for trading. They can set their own rules, they can say who the participants are, and so they're rather hidden and they can be pretty prolific. You can have a lot of connections through a lot of dark pools to a lot of different people. And that's where you get into, there's a lot of room for rigging prices if no one can see what's going on. So the biggest issue, 1/3 of all trades not happening on the exchange, when you hit 40% in a single stock, you've lost almost all your price discovery at that point. There's so little traffic going through for that stock that the price discovery is hugely inhibited. And when people realize this, they will stop trading through the lit exchanges for that product or that stock, because they know they don't get the best price for it. And that reduces the amount of lit exchange transactions even further. The New York Stock Exchange at one point had 80% of all trades running through the floor. As of only a few years ago, there were points when it was only 11% of all trades actually went through the lit exchange of the New York Stock Exchange. That's a huge amount of traffic that can be hidden and manipulated. Say a market maker takes a brokerage account and says, send us all the trades that you want for this particular ticker symbol, this company or stock. They'll send them to that market maker from the brokerage. The market maker will see all of the trades and they will decide what ones to let go through to the lit market. They're the ones that set the price on the lit market where the retail traders are making trades. The thing is, they've got 80% of those other trades hidden in the dark pool, and they can make any price transaction they want. So if they go and they find a difference in the dark pool price between the lit exchange price, they'll only let a few through and they will make a huge amount of money on the difference between the lit exchange and the dark exchange. Yeah, there's way too much traffic on the dark pools. And what's a little bit scary is they're opening up these dark pools to more and more and more traders, especially retail. Apparently, they don't have enough liquidity and they're looking for bag holders. Be very, very careful with dark pools. You can't see what's going on, and they can. Stay safe with your trading. Know it all out.